What would I do if I left my company that I had a 401k through? So I would actually do this in a few steps, but there's other ways to do it. I would actually convert the whole 401k portion, and this depends on how you feel about Roths, but I'm a big fan of Roth because basically with a Roth account, you pay taxes up front so that when you withdraw the money later at retirement, then you withdraw it tax free because you already paid the taxes up front. So I would take this 401k money and convert it to a Roth 401k. And what that means is the amount of money that you took when you convert it to a Roth 401k, you would actually have to pay taxes on that amount. But given that you think your income is going to increase in the future, you would want to go ahead and pay taxes on it now so that once it's in a Roth, then you can withdraw it tax free at retirement. And you've already paid taxes on it, so your earnings don't get taxed. And once I did this, so once I got it into a Roth 401k, then because I want more investment options and just more flexibility, I would do a direct rollover from a Roth 401k to a Roth IRA. Basically, what this does is Roth IRA is like the main advantage is that you get more investment options, like more flexibility. And I kind of like enjoying a little more risky stuff than what Roth 401ks provide. So I would take this full amount and then direct roll it over into a Roth IRA. This is very important. So you would want to make sure that you do a direct rollover from your Roth 401k plan to your Roth IRA. Because if it's not a direct rollover, then it would be something called a withdrawal. And a withdrawal, given that you're not 59 and a half or older, a withdrawal would essentially mean that you have to pay a 10% penalty on the amount that you withdrew because you withdrew it prematurely. And then, not to mention, if you did it as a withdrawal, if you withdrew the Roth 401k, then once you try to put it back into an IRA later, then you would actually hit your contribution limit of for 2026. It would be 7,500 in Roth IRA. So not only would you pay the 10% penalty when you withdrew the amount from the Roth 401k, but you would also it would also count as a contribution back into the Roth IRA. Meaning that you would only be able to contribute $7,500 worth. So if you wanted to contribute later in the year with other money, you wouldn't be able to because that portion that you withdrew and put back in was automatically considered a contribution rather than a rollover. So you want to make sure that you do a direct rollover from your Roth 401k to your Roth IRA so that you can still contribute $7,500 worth in the Roth IRA, plus you have the amount from the 401k into the Roth IRA. So basically what this does is it consolidates everything. So it consolidates the $7,500 maximum from your contributions, plus it also consolidates whatever amount you had in your Roth 401k when you rolled it over. So that's what I would do if I left my company in which my 401k was through.